All right. Gary Meek, living in Sacramento. Here with my good buddy, Ben Johnson over at Movement Mortgage. How you doing today, sir?
I'm doing great, Gary. Thanks for having me on.
You got it, man. I'm so excited to have you here today. I really appreciate you coming on and sharing with myself as well as my audience to kind of talk about the loan process, the pre-approval process, and all that you can do to help out with someone.
Yeah, terrific. I look forward to it.
So the main point of this is to kind of help people go through the process, right? So I've got a buyer that comes in and they meet me at an open house and they're thinking, I want to buy a house, and they don't know what the steps are. And it's difficult oftentimes for me as an agent to say, here's the entire process in 15 minutes at an open house. So our goal is to do some videos to help people through that process and be able to look at each of the individual steps. And so today we're talking about mortgages, and that's your specialty, my friend.
That is. Yeah, that's great. There are a lot of people involved and a lot of pieces to put together. So I'm excited to describe pre-approval and the loan process and what all that looks like.
Cool. Awesome. Well, let's go ahead and jump into it. So someone comes to me and they say, Gary, I met you at an open house. We saw your website. We like this pretty house. And we start to have a discussion about the house itself. But then one of the very first things I'm talking to them about is, what's the pre-approval process look like? Because people come to me and say, well, I think I want a $500,000 house, but they don't know what a $500,000 mortgage looks like. And there's so many different kinds of mortgages that they've got to look at which one's going to best fit their scenario, right?
Yes, absolutely. I mean, everybody's situation is different from credit to finances. And we really custom tailor the financing to meet their needs and goals. So if somebody plans on being in a house for 2 years versus 10 years, that might affect the type of loan that we look at.
Okay, cool. So I got somebody, I say, hey, Ben is my guy. You got to go talk to my buddy. And I send a Joe Smith over to you, Ben. What does that look like when that person's calling you for the first time and kind of interacting with you? Let's walk through that.
So the very first step, I like to get on what I like to call a discovery call. And that's really just an introduction to answer any preliminary questions that they might have. And also, it gives me an opportunity to find out what their financial goals are and kind of get an idea of their general financial picture. So, we can vet out a lot of things in that first call. It could be 5 minutes, it could be 15 minutes. And depending on the outcome, they could go straight into an application, or we could have some other steps to follow up.
Okay, very good. So someone comes to you, they did the discovery call, looks like they're going to qualify, they got good enough credit score, income's good. What does the process look like for them to get pre-approved? What kind of documents are they going to need? How long does that take?
Yeah, that's a great question. So all lenders are different, so I'll give you our experience.
Of course, yeah.
So once we finish up the discovery call, that same call might end up in doing an application over the phone. If they need to do it at a later time, we have an online application that's very simple to fill out, and they can do that in about 5 to 10 minutes.
Wow, okay.
So if they go online, they create a quick account, they answer all the questions, and then from there, it will tell them a list of the documents that we need. So just very standard, we're going to need 2 months of bank statements, typically 30 days worth of pay stubs, a photo ID, and a copy of your tax returns and W-2s for 2 years.
Okay.
That's the very basics. Sometimes we do require additional documentation. If somebody's self-employed, we might need a profit and loss statement or something like that. But really, the initial documents to get pre-approved is pretty simple. Once that application or questionnaire is finished, I can start working on the loan without having the full list of documents, because sometimes it might take you a day or so to get organized and to be able to scan those things in or take pictures to send them to us. So from the time when the questionnaire is submitted, my goal is to have one of two outcomes within 24 hours. So once we receive the application, I get an email, I go into my system, and I start reviewing everything. So within 24 hours, the first outcome would be actually me issuing a pre-approval letter.
Okay.
They take to you and actually start shopping for a home within their price range. The second outcome, if they're not quite ready, and that can be for a few different reasons. Maybe they're working on getting their credit score higher. Maybe they're waiting on a promotion at their job. We'll put together an action plan within that same 24-hour period to get them on the right track to be where they want to be. Additionally, I do create a presentation that they can view. So when somebody comes to me, typically I'm providing at least 2 to 3 mortgage options. So, if you hop on a random website or if you just walk into your bank, they're probably just going to present you with one option that they think is best. I like to provide 2 or 3, and then we can talk together so that the client can make an educated decision based off their personal needs.
Gotcha. Yeah, I mean, education is going to be the key. Luckily for me, I've been in the industry for 20 years and did loans for the first 3 or 4 years. So I get some of the basics and I can help to educate them. Don't get me wrong. I don't ever quote rates. I don't ever try and, say I'm a specialist, but I know enough at least to be able to give them some basic direction. And oftentimes I'm saying, hey, I don't know that question. I don't know that answer. You got to go back to Ben and get the answer. So very, very cool. So someone now has a pre-approval. We're going to take them out shopping, me or somebody on the team. And we found the property. We wrote the offer. They're qualified for, we'll say $500,000 just for, this sake of this video. And now the offer's been accepted. I'm going to start doing some pieces that we'll get into in later videos, the earnest money deposit, disclosures, inspections. But what do you guys do? As soon as I'm in contract and I say, Ben, Joe Smith is in contract, here's the contract. What are the next steps for you guys?
Yeah, that's a great question. So as part of the pre-approval process, we've already got a lot of the work as far as the loan's concerned done.
Okay.
And the reason we do that up front is so that we can perform and have less headaches during the process.
Okay.
So as long as you get us your paperwork and application done, once you're in contract, I'll follow up with the client and we'll do an in-contract call. And depending on how much time has elapsed since the initial application, it might require me to get an updated pay stub or an updated bank statement or both of those.
Okay.
But really, once the offer is accepted, now our clock has started.
Yes.
So what we're going to do from the lending side is get your updated documents. We're going to input all the terms of the contract into our system, and then we generate a set of disclosures as well. So by law, any lender has to provide the client with what's called a loan estimate, and that has to be within 3 business days of getting the contract accepted. So within 3 days, you'll have a formal estimate of all the costs and the terms that we're offering.
Okay.
Now, we go through all those details prior to getting in contract so that you know what the payments look like, but this is the real deal, right?
Yeah.
So the loan estimate goes out. If you have any questions about that disclosure, we will get on a phone call together, go through the numbers to make sure you understand where everything's at. And then from there, we sign the disclosures electronically. And then we're also going to order your appraisal. Okay. So I know you mentioned inspections. There's one main inspection that the lender needs, and that's the appraisal report. The reason you get an appraisal is to verify that the home is worth the price that you're paying for it. That protects the client and it protects us as the bank as well.
Okay.
So the disclosures are signed, the appraisal's ordered. Typically appraisals come back within about a week or so.
Okay.
And then, you have an opportunity to ask any questions during that time period. Once we have the disclosures signed, your updated paperwork and the appraisal back, we package that up and then we send that off to the underwriter.
Okay.
So your pre-approval is based off an automated underwriting system. The underwriter is an actual person that looks at your loan to sign it off.
Okay.
Yeah. So once that's done, then we send another disclosure that's similar to the loan estimate. It's called the closing disclosure.
Gotcha.
So this is the final estimate of all the numbers. It tells you what amount of money is left for your initial investment and things like that.
Okay.
3 days after the closing disclosure is sent, you're able to sign your final loan documents.
Okay.
And that's usually done with a notary, either at your home or at the title company.
Yep.
And then we can fund the loan that same day or a day later.
Okay. Very, very cool. So for us, we usually talk about a 30-day escrow. Is that kind of common for the lending side as well?
Yeah, 30-day, I think that's a pretty standard contract period. We're fortunate enough to do things very quickly.
Mhm.
So if we need to close quickly, we can close in as little as 15 days.
Wow. Okay.
Yeah, so again, we do a lot of our work up front during the pre-approval stage, so there's less work to do once you're actually in contract.
Gotcha. Okay. Man, that's awesome, buddy. Thanks for kind of detailing it all out for us. You know, a couple of things we didn't talk about because you're just talking about the process.
Yeah.
What are some of the loan types that you guys offer or that a person might have access to?
Yeah, that's another great question. Like I said, if you walk into a bank and say, I want a mortgage, they're going to give you a generic solution.
Yeah.
But like you said, there's so many options out there. If somebody, has served in the armed forces, thank you for your service.
Absolutely.
We could do a veterans loan that allows somebody to come in with zero money down. And a lot of times we can even cover closing costs for that type of financing. So that might be a no money out of pocket loan. If somebody's looking in a rural area, you might have a zero down USDA loan that's available. Your standard terms that you usually hear are conventional financing or an FHA loan.
Absolutely.
So just real quickly, an FHA loan is going to allow people to buy with a lower credit score.
Mm-hmm.
A conventional loan is just kind of your run-of-the-mill mortgage that goes to Fannie Mae and Freddie Mac.
Okay.
Those are actually available with as little as 3% down for a first-time home buyer. And then even on top of those, there's a number of special programs out there. So we do Cal HFA down payment assistance. They have programs that cover the down payment and closing costs in some cases. So there's a whole myriad of loan options available, which is why I think it's so important to provide each client with 2 or 3 options so that they can see what's available to them.
Cool. Absolutely. So a couple things that I know of that not everybody does is, why don't you describe to everybody what PITI is?
Oh, that's a good term. PITI. So that's principal, interest, taxes, and insurance.
Yeah.
So probably 95% of the loans that we do, your taxes and your insurance payments are included in your mortgage payment. So what that means is you get one bill during the month and you make your mortgage payment, and that's setting aside money for taxes and insurance. So one thing, especially about online loan calculators, a lot of times they're misleading because they will only quote you the principal and interest portion.
I know, it's crazy.
Where the taxes and the insurance are important, and those are going to be due. So PITI is principal, interest, taxes, and insurance.
Okay, very, very cool. And I know there's another term that are on loans that have less than 20% down, and that's PMI. So let's talk about that one.
Yes, PMI. So that's private mortgage insurance. And you're correct. Anytime you put less than 20% down, the bank sees that as a little bit more risk for them, right? Because they're lending more of the value and you're coming in with a smaller amount out of pocket. So to protect them from any losses in the case that there's a foreclosure or delinquent loans, there's a mortgage insurance policy attached with that mortgage. So with less than 20% down, part of your monthly payment will be for PMI. And it's interesting because a lot of people think that that's a bad word, but honestly, mortgage insurance has gotten fairly inexpensive. And especially closer to that 20% down mark. So if you put 10% down, I just did a quote today, the mortgage insurance was only $40 a month. So it's all risk driven. So if you have a higher credit score, your mortgage insurance is going to be cheaper.
Gotcha. Okay, so when someone's out there looking for a loan, PITI is super important. And so we said we don't have 20% down, so then you got the PMI, which is another cost. But you also said conventional loans you can get into for 3% and FHA with 3.5%. So the standard of the past of 20% down, where people are, I got to save $100,000 to buy a $500,000 house, really isn't realistic in today's economy. $15,000-$20,000 down probably gets you into a basic standard beginner home loan, right?
Yeah, absolutely. I mean, a typical first-time home buyer, they're going to use that 3% down option, maybe a 5% down option, maybe the down payment assistance option,
Okay.
so that they're coming out of pocket even less money. But that's usually how people get their foot in the door.
Yeah.
And then as time goes on, they build equity in that first home.
Yep.
And then they're able to sell it later and put bigger down payments as they move up in home over the years.
Gotcha. Yeah, absolutely. So a couple things that we work with in today's economy. Obviously, we're just coming off of this huge high of 2021 and the pandemic, but now things are starting to settle out a little bit, and it's a little bit more of a buyer's market. So when they're working with us specifically, we always are negotiating that we get the seller to pay for some of those closing costs or a rate buy down. So why don't you tell everybody a little bit about what a rate buy down is and kind of how that works?
Yeah, absolutely. It's a little more of a complicated term, but
Yeah.
Essentially, when it comes to an interest rate on a mortgage, you can pay more money up front to get a lower interest rate, or in some cases, you can take a higher interest rate and get a credit back from the lender to help pay for the closing costs. So like you're referring to in different markets, if you find a really motivated seller that wants to sell that property quickly, you might be able to ask them to credit you some money to put towards your interest rate. In some cases, that can lower your interest rate 2% or 1% for the first few years, or you can spend the money as a lump sum and get a low rate for the entire life of your loan.
Gotcha.
So rate buy downs are pretty common right now.
Yeah, definitely. And that's why it's super important that you work with a agent that understands the market that you're in currently and knows how to negotiate properly on your behalf, because lowering a house price cost by $50,000 or by $20,000 from $500 to $480 doesn't really affect the payment much, right? It's probably $25, just rough estimate. But if I got that $20,000 and I'm able to buy the rate down by 1%, it probably adjusts the payment by a couple $100 most likely, correct?
Yes. Yeah, buying the rate down 9 times out of 10 is much more impactful on the monthly payment. Gotcha. And it'll help you save a bunch of money over time over just, lowballing the price by 10, 20,000.
Gotcha. Yeah, that's why it's definitely right. Make sure you have the right agent and the right team. I mean, ultimately, as an agent, if I've got Joe Schmo over at X Bank, I don't know Joe. I don't have a relationship with him like you and I do. So when I get into contract and I'm negotiating on behalf of the buyer, I can have a discussion with you to say, hey, what's it going to take to buy this rate down? Or how much credit do we need to cover the closing costs? Because we have a relationship, it helps us to work together for the benefit of the buyer way more than, some random credit union, right?
Yeah, absolutely. Or like an online lender, you never know what you're going to get with those folks. But yeah, how we work together in the past is very closely. We strategize on behalf of the client. We know what their financial and long-term goals are. And so we can really help them make an informed decision with the best options.
Cool. Awesome. What do you have as last minute, like parting information, things you would share with someone as they're thinking about going through the process of getting pre-approved? They got that little bit of nervous tension. I'm not sure if my credit's good enough. What would you share with someone? Just some parting thoughts.
I would say it's better to do it sooner than later.
Okay.
And the reason being, remember we talked about the 2 different outcomes from the initial application.
Yeah.
If somebody goes and they apply, and maybe that credit scenario applies to them, and maybe they can pay a couple $100 and get a 20 or 40 point jump in their credit score.
Oh, wow. Okay.
The sooner they have direction on what they need to do to get a better deal, the better in my mind. So, a lot of times I hear, well, I don't want to pull my credit. It's going to hurt my score. When we pull a credit report, it can affect your score because it shows up as an inquiry. So there could be a couple points there. But at least you know where you stand, and I can give you advice as to what you need to do to get your score up. So that's my one thing. Oftentimes people will wait, and then a house comes on the market and they say, oh my gosh, that's the neighborhood where we want to be. That's the number of beds and bathrooms we need.
Yep.
Let's go look at it. Well, if you haven't done your pre-approval and you don't know what the monthly payment looks like and the down payment, it puts you at a disadvantage, really, because you're not able to write an offer yet.
Yeah, exactly. 100%. I totally know what you're talking about. And I've been there before with my clients. Luckily, like I said, the market today, a little bit less demanding out there, and things are sitting in the market a little while longer. But I agree with you 100%. Got to get pre-approved. And that's why one of the things we first do is I'd love to meet you and show you a property, and I might show you one or two. But before we really dive in and start looking at 50 houses, I need to know what you're pre-approved for, and they got to get a good understanding of what that payment's going to be, right?
Yeah, that's the most important thing. When I do the discovery call, I always like to meet people face to face if at all possible.
Yep.
But we'll talk about your family budget and things like that to make sure that we're getting you into a financially stable situation. So, above and beyond this first home purchase, I like to be an advisor for my clients throughout their lifetime.
Gotcha.
So it's not just a transactional thing. We're going to be here to support you, and we want to make sure that you're set up for success financially.
Cool. Awesome, buddy. Well, I truly appreciate you coming on today and being a part of this with me, and helping out those people that we're going to be sharing this video with on their journey to getting their first house, their next house, their final house, whatever it is.
Yeah, it's always exciting to help people and see the smile on their face once they're able to buy a house. So thank you for the opportunity to jump on with you.
Cool, absolutely. And real quick, in the description below, you're going to find Ben's information, and we're going to put a link to his application. And then also make sure you check out the other video that Ben and I did specifically about 203Ks. It is a special loan within FHA. There's also a version of it conventionally, but that's where you can buy a house, get it all dialed in perfectly the way you want it, spending up to $100,000. But look for that video. It'll be down in the link below as well. Thanks again, Ben.
Thank you, Gary. Appreciate you.
Appreciate you, buddy. Take care.
Bye-bye.